All right. Welcome, everybody. Hope everybody had a great weekend. To start off today, we're going to be discussing this probably more than once over the next couple of weeks, and most certainly on the radio show as well. Getting to this year end stuff taking place now. And you've got all of these, all the Wall Street chattering classes that are out, and they're all giving you their prediction, and their mouths keep moving, and they don't really say much of anything at all. Nothing of any real importance. And every single year, you can go back and you can take a look at the predictions from the prior year, and 99.9% of them are wrong. Again, a year ago, the chattering classes were telling you, why, we're going to expect Fed funds at around 2% going into 2023. And all of this nonsense that we told you, it's garbage. Nobody's held to account on this. And, to be fair, we don't make those predictions. We don't make those predictions. And the reason why we do not make those predictions is because we can't. We can't. I don't have a crystal ball that looks into the future. And I can gather as much information as I can, do as much homework as I can, but it's a complete exercise in futility. Sub-reference popped into my head right now. You got Dustin Hoffman's character in the movie Rain Man. Genius, right? Genius. He can count cards, with math, one of those types. Absolute genius. Kills it. Goes up to a roulette wheel, he puts money down, he loses. You can't game this, and you can try to take in as much information as you possibly can, but odd things are going to happen. So how do we go about investing in this type of climate? And it's the thing that I've tried to get across to people for a long time. Our philosophy really doesn't change when it comes to owning high quality companies that pay you to own them. So sure, there are certain periods of time when you get raging bull markets, and you can look at index investing. It'll be phenomenal. It'll do much, much better. But there are also periods of time where you got to be a better stock picker, and you really have to focus on quality because everything's not going up. And again, we're always in that camp. We are, and I'd like to remind everybody that during weak markets, you can do really well. This is where real wealth is built. It's not when the markets are racing through the roof. It's the base, it's the foundation that you build when things are down. The quality that you put into your portfolio. How much can you accumulate when stuff is on sale? Again, you get these wizard of smart guys out there thinking, I think the S&P is going to bottom out at this. That's nice. And you know what? Guess what? They might be right, but they're guessing. Sure. I like the old saying, stopwatch is going to be right twice a day. They don't know. See, we don't pretend here on this so that we're smarter than we are. We understand that we don't know what we don't know. So we don't delve into any of that nonsense at all. Can I give you what I feel? Do I think it's going to be volatile going into 2023? Absolutely. Do I expect much out of the overall markets in 2023? No. We didn't expect much in 2022. We told you that. Sailing was going to get difficult. But guess what? Opportunity again to build that base in your portfolio. And that's what you need to do. Again, again, one of the other underlying things are the overall markets right now, and I'm seeing it out there. Investors are starting to worry more about a weakening economy rather than inflation. They're both issues that you have to take into consideration. And again, will earnings come down a bit? Yeah. I think it's going to be more revenues. I think a lot of companies are retrenching to some degree. That's why we're seeing layoffs in tech companies and many others out there. We've discussed this here on the show, the difference between a good firing and bad firing. Good firings are ones where you kind of recognize, man, I got a bunch of people here, and I built up this bureaucracy that I don't need. And it's just, I don't need these people anymore. They're not helping the company. They're not helping the business. So I can get rid of them. And that's obviously a much better place to be in rather than having to fire people because business is bad. Big difference between the two. And business is not bad. It's not. Companies overdid it. They overhired, they overspent it, and they're going to have to retrench. That's what you're supposed to do during slowing periods of time. So again, year in review, 2022 nonsense, 23, what to expect in 23. A lot of this is going to be all over financial news. That's nice. That's wonderful. It's filler. Again, it's something for people to talk about like they do every year at the end of the year and the beginning of the next year. It's just a reality. It's like those Super Bowl shows that start 8 hours before the game. They got to find something to talk about, for crying out loud. Anyway, I want to talk a little bit about this. So a couple stories. Stellantis, a automaker, closing its an assembly plant in Belvidere, Illinois, this coming year. Going to be laying off quite a few workers. They make Jeep Cherokees there. And they're saying one of the reasons why they're doing this is that they have to focus and retrench on EVs, electric vehicles. It's expensive to make EVs. And if they're going to go ahead and make EVs, because you really don't have much of a choice, guess what? We're going to have to rid ourselves of these plants. It is what it is. And what do I mean they don't have much of a choice? What do I mean by that? We've discussed this over the years here on the program. The auto industry has to bow down and kowtow to Washington, D.C. Obviously has to kowtow to the European regulators as well. If you have to, you listen to the government says you have to have fuel mileage, your average mileage standard has to be X. You have to meet that. How do you go about meeting that? Well, you better, be selling cars that are incredibly efficient. Again, these automakers, their most profitable automobiles are SUVs. SUVs, they make a fortune on SUVs. So you want to sell SUVs, you better be making some cars that are really, really efficient so you can meet those CAFE standards, or guess what? You're going to face fines. I remember back during the whole auto bailout, there was some concern and people were up in arms. Some of the automakers were moving car plants to Mexico and they just got bailed out. Well, again, they're losing money on these tiny little cars. They'd rather not lose too much money on making these tiny little cars that they are forced to make because of government regulations. Now, again, the CAFE standards are getting out of hand at this point in time. So again, you're going to have to spend the money to pump out these electric vehicles, whether or not they're going to be making money on these things anytime soon. That's the reality. People, if you've taken a look at some of Rivian, there was a story about Rivian today. Rivian, they just 3 months ago, they signed a deal with Mercedes to start making delivery vans. They already had to back out of that deal. Have you seen their stock price? Have you seen their stock price? They're having a difficult go of it. You've seen Lucid? Lucid stock price, what is it, about $2 now? Again, these companies were SPAC pump and dump schemes not too long ago. Oh yeah, Chalmers, pushed everybody, told everybody on his podcast how wonderful these EV companies were going to be and these SPACs, and how they deserve this ridiculous $100 billion plus valuation. And what did we tell you? Told you it was BS. And that's exactly what it was. It was a pump and dump. Hey, like I said, okay, you bought into these things. You made other people a lot of money because you bought their stock at overinflated prices. You helped make them money. You took their stock and you put it into your pocket that they were selling because they wanted out. People, at some point in time, you have to be profitable. And I've mentioned this about 100 times over the past several months. Cool, neato, woke. They're not investment strategies, guys. They're not. And you have to stop falling victim to this nonsense. Anyway, another example here. Cathie Wood story. Our investors are losing faith in Cathie Wood's Ark Innovation. They're down 63% this year. Again, most of the companies in Ark Innovation are not profitable. Again, they're cool and they're neato companies. And I know you can talk the buzzwords and social change and all of these things. Cathie Wood had a good run of it for a period of time. And again, the way that they were able to hype up her fund and get it promoted on CNBC and other publications and in all the magazines out there drove more money. Her connections to people she know got big dollars to flow in from pensions and other places. Cathie Wood's fund was a hype cycle fund. As long as the hype cycle was going, as long as cheap money was flowing, and these companies had readily accessible cheap cash to keep them afloat, the party stayed on. Okay. Eventually, the kegs run out. The kegs run out, and that's where we're at. For all of these hyper growth companies, hype cycle companies that we've been warning about for years, party's over. It is. Some of them that have some neato ideas that some bigger company might think, gee whiz, maybe we should buy into that. That it might happen. You might see some takeovers here and there, but they're not going back to the levels where they were before. Just got to be careful, people, when it comes to valuations. I spent some time this past weekend on the radio show talking about how, things used to be done. And before you could go public, you had to show some sort of profitability. I mean, that's not the case anymore. I mean, and it's not even about being profitable. It's just about, again, your cool idea at that point in time. And, many of these venture capitalists out there, not all, but many. And I go as far as saying most out there. It's not the concern about building a company for the long run. It's about getting out, themselves taking their position out, and their investors getting out of their positions. And the sooner the better. Churn them and burn them. From Wall Street? Churn them and burn them that's how a lot of investment banking is run today. And it really is unfortunate. And quite frankly, it's been going on for some time. It's the reason why I left. It's the reason why I left that entire industry, because I'm not a churn them and burn them guy. Anyway, some red flags. Beep, boop, 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 boop. Binance said that they did an audit and they're showing proof of reserves of customer funds, but its auditor will not vouch for the reserves nor the methodology demanded by Binance. Again, just think. I don't even want to go into it further. Okay. I could go through the entire article, what we've learned from this thing. The auditor won't vouch for the audit. Is that someplace you want to have your hard-earned dollars? Again, the old farewell and adieu. At some point in time, people, you have to wisen up. Treasury said Janet Yellen interviewed Norah O'Donnell on 60 Minutes. She seems to think that we're going to avoid a recession in 2023. Let me tell you something. If we get into a recession in 2023, it's not going to be officially called until at least 2024. Yeah. Now, again, we had a textbook definition of a recession this past year. We had 2 quarters in a row of negative economic growth. Textbook definition. The definition that is taken by the media and politicians is the high economic priests in Cambridge, National Bureau of Economic Research. They have to call it. They have to call it. They are the ones that make the decision. And until they do, well, I don't know. We can all guess to see whether or not there was a recession. I want to remind you, all the crap that happened in 2008, 2009, it took them over a year to declare that a recession. I kid you not. But anyway, I mean, she seems to think that when soft landing moving forward. I hope so. I do. I do believe people that I think we'd be in a much better place and heading in a much better direction. Obviously, we get fiscal policy under control. We've already seen some pushback from the Republicans in regards. We got the debt ceiling and continuing resolution, and they don't want to shut the government down every year. It's like Groundhog Day. It is. Every year we go through this at the same damn time because these people we elect don't do their job. They don't do their job. It's just that simple. So they're going to want to push this back until the next Congress, and then we'll see if the Republicans hold the line. Again, I've mentioned before, I'm not holding my breath. I do believe that we can do a lot when it comes to immigration. I think that that's a big, important issue right now, and dealing with the border and coming up with some sort of solution and getting these people into the workforce legally and making sure that the border is secure. Yes, it's an issue right now. Yeah, how many people out there walked into a store or a restaurant and you look around, there's like nobody working. Where's the waiters? Where are the bus boys? Can you say bus boy anymore, or is it bus people? No, I don't know. And you can't find people. Help wanted signs everywhere. Again, people, it needs to be dealt with, and immigration reform would be a big one. Interesting story talking about the Federal Reserve and how every now and then they do what they call a strategic review. Again, I think about these things. As a communist party and what their 5-year plans and 10-year plans. Well, the Federal Reserve is, they said they're not going to do a strategic review on policy until 2025. Guys, let me get this straight. Okay. You blew it completely. Blew it completely when it came to inflation. And absolutely out to lunch. I mean, you really don't have many real tasks or jobs there at the Fed, do you? And yet you couldn't spot inflation? Transitory nonsense? Anyway, again, they're limited in what they can do anyway. And I've never been a big believer in the Fed and trying to control this, that, next thing. Again, they have a hammer. They have a hammer. And I know it's an old saying, cliche, when you're a hammer, the entire world looks like a nail. They don't have a lot of the policy tools to deal with certain issues. And they don't open up their mouths when it comes to this either. Again, they're the credit card. They're the credit card. Washington, D.C. starts clamoring for more spending, whatever it may be. They oblige. And, that to me is a bit of a problem. It's not just monetary. Monetary policy, there's no doubt that it's important. There's no doubt you cannot just flood the country with cash. That's inflationary. But other things are as well. We ignore the fiscal side. I mean, people take a look. We're $30 trillion plus in debt. Our entitlements are out of control. These are things that we need to get our arms around that, quite frankly, the Federal Reserve just can't fix. Vanguard. We came after Vanguard last week with some of the ESG nonsense, and I guess that's it. Vanguard, I guess they're discovering now that the whole climate virtue signaling is costing them. They're pulling out of the net zero asset managers NZAM pledge to purge fossil fuels and CO2 emitting companies from its funds. CO2 emitting companies from its funds. I mean, these people come up with this stuff. You do realize that we as human beings are CO2 emitting mammals like all the other mammals on the planet, right? You're gonna purge from an entire asset. You're gonna purge your investment funds from the very thing, the lifeblood of the entire globe. The lifeblood for the global economy, energy. You're going to give that up. Oil and fossil fuels for windmills and solar panels? Did you do again? You're so stupid that you have to thinking about things like that. I mean, it's an integral part of your portfolio and asset classes, energy. And no, yeah, we're gonna purge that. Yeah, I guess Al Gore's none too happy with Vanguard. I heard he put out a couple tweets. He's none too happy. None too happy. He tweeted away from his, what has he got? Like a 15,000 square foot home somewhere, flying around on private jets. Oh, yeah, just Pete Buttigieg. Pete Buttigieg, always yelling at people. I remember first he told everybody he rides his bicycle to work, and then he gets caught riding a massive SUV. Hey, he doesn't take first class. He takes private jets everywhere. Mayor Pete Buttigieg. And, I thought about it. I mean, he's probably just trying to compete with John Kerry. John Kerry, one of the biggest friggin' hypocrites on the entire planet when it comes to climate. Holy crap. Boy. Household wealth dropped by 13.5 trillion from January to September. That is the second worst amount in wealth destruction on record. Yeah. American households lost about 6.8 trillion in wealth over the first 3 quarters of 2022. Stock market shed 25% of its value. Also talking about real estate, household balance sheets. Also got to factor in inflation when it comes to this, and it's a large amount. But again, mine went down. Yours probably went down. All probably went down. Has it changed my life? No. Again, I guess it's kind of, again, how you view things. Okay, we had household wealth drop. We had a stock market come down. Issues this year, inflation, Fed raising rates at a record pace. Again, you look at it in the way we look at it, saying, now's a good time to build back that household wealth. And when things inevitably get back on track, then where are we going to be? But again, that's how wealthy people think about these things. Okay, you got to think about everybody. They always pointed out how much wealth did Elon Musk lose? How much money did Elon Musk lose? Is he bothered by it? Oh, you don't think Bezos's wealth is down? Has it changed his life at all? No. No, again, I got that old JP Morgan line where, bear markets, recessions, whatever it may be, stocks return to the rightful owners. You have to be smart. You have to be smart. Do you think that, the Warren Buffetts and the Charlie Mungers of the world are fretting the markets being down this year and the fact that Berkshire Hathaway is down this year? Do you think that they're sweating it at all in the slightest bit? Or are they going, well, that looks good. That's on sale. That valuation came down. I can pick that up with it's well below its intrinsic value. Let's take advantage of that. Again, this also comes with dollar cost averaging and paying yourself every single month and things that we try to teach you here on the program. Anyway, quickly, I got a couple more I want to do. Lawsuits. There's a story here. How lawsuits cost you $3,600 a year. I don't know if I mentioned on the podcast last week. Did I tell you about the macaroni and cheese lawsuit where they got a class action suit that was brought by some whack job attorneys suing, I forget it was Kraft, one of the food companies out there, because they claim that you could make macaroni and cheese, instant macaroni, in 3.5 minutes, but they didn't take into account the time to put the water in and take the top off and put the cheese and mix it. Yeah, I actually filed a class action lawsuit, and it's actually going to court. These things, they suck. They're awful. They do. And I'm sorry, I'm going over it here on the program. This thing we do here in America, we constantly love to lie to ourselves here in this country and tell everyone, including ourselves, how awesome we are at everything. See, I don't do that. I'm one that you look yourself in the mirror and you want to, you self-reflect. How can you improve? I'm sorry. Our justice system in this country sucks. It's awful. It really is. It's garbage. It's garbage. We need to learn a thing or two from some other places. Nothing wrong with learning from others. Wise man learns from a fool. A fool learns from no one. Loser needs to pay. Loser needs to pay here. We got to get to the point in time. You're going to get to some frivolous lawsuit. You lose, you're going to pay. Seems right. Seems fair, doesn't it? Yeah, it's one thing about the state of Florida. I love the state of Florida, but that drives me nuts. That you've got billboard after billboard after billboard after advertisement after advertisement, all of these ambulance chasing attorneys. All these ambulance chasing attorneys. They mentioned one of the things, I mentioned one of the things, inflationary things out there, how much auto insurance has come up. Why do you think that is? Why? Everybody driving around like a madman now? No. Oh, it's because, again, certain people will sue. Sue at the drop of a hat. Why not? Why not? Insurance company, they think, insurance company's going to pay. No. Yeah, insurance company's going to pay, but the insurance company's just going to pass those costs on down to everybody else. It's like when, something happens, some kid will fall on a piece of playground equipment. How many times I fell scratching our arms on playground equipment, falling off at the elementary school. This is back in a point in time, they didn't have the rubberized ground or anything like that. Did anybody sue? No. Nowadays, oh my God, my little Bobby scraped his knee playing on the playground. Calls the attorney, sues the school. School district's got to pay. No. The local taxpayers paid. Taxpayers pay. Insurance prices go up. And, difficult for people to grasp this concept. And there's that word, accident. Accident. Like I said, I got, rear-ended in my, how many years ago was this now? And it was pretty hard. And I got a little whiplash from the entire thing. And, oh my God, lawyers call, you got to sue. This is the type of money you're going to get. I'm like, no, I'm fine. Okay. I'm bothered. Yes. You're pain and discomfort. I know. I'll live. I'll live. I'll be okay. I'll be okay. It'll be all right. It was an accident. Anyway, real quick on this one too. We mentioned this is kind of a follow up here. We talked about the large chunk of high income earners that leaving the state of New York, and we showed 10% plunge in taxpayers who made over $750,000. 6% of those with incomes between $150,000 to $750,000. They've left the state. And what is the response by the people on the left and activist groups? Tax them more. That's their response. Again, the old Forrest Gump, stupid is as stupid does. Again, I don't know how these people think or how their minds actually work, but something wrong with their medulla oblongata. Anyway, have a great day. WatchDog on WallStreet.com is our site. Become a part of the WatchDog on Wall Street family. Take advantage of everything we have. That's WatchDog on WallStreet.com. We'll see you.